Have you ever asked yourself where your money should really go in 2025? Should it be in the stock market or should it go into crypto? Both offer the chance to build wealth. Both come with risks. But depending on your goals and mindset, one of them might be a better fit for you right now. In this video, we're going to explore the key differences between stocks and cryptocurrencies. We'll look at the advantages and disadvantages of each, how they behave, and how you can choose the right strategy for your financial journey. Let's dive into the world of money, technology, and long-term thinking, and figure out how to make smarter decisions starting today. Let's start by understanding what we're actually talking about. When you buy a stock, you're purchasing a small piece of a real company. If you own shares of a business like Apple or Amazon, you technically become a part owner. Stocks grow in value based on how well the company performs, how the economy is doing, and how investors feel about the future. Cryptocurrencies, on the other hand, are digital assets. They're not tied to any single company or government. Bitcoin and Ethereum are the most well-known examples. These currencies are based on blockchain technology and operate in a decentralized way. That means no bank, no central authority, and no single point of control. Stocks are based on business fundamentals like profit, debt, and leadership. Crypto is based more on innovation, adoption, and in many cases, community belief. Stocks are part of the traditional financial system. Crypto is trying to rewrite the system entirely. Let's take a closer look at stocks in 2025. One of the biggest advantages of stocks is that they have a long and proven history. Stock markets have been around for centuries. They've survived world wars, global recessions, inflation, and major political events. Over time, the stock market tends to go up, especially when you invest in solid, established companies. Some stocks also pay dividends, which is a share of the company's profits that's paid to you regularly just for owning the stock. This can provide a steady stream of income, especially if you're holding these investments for the long term. Another strength of stocks is that they operate in a regulated environment. Stock exchanges have rules. Companies must report earnings, disclose information, and follow financial laws. That adds a layer of transparency and protection for investors. However, stocks also have some downsides. While they tend to grow over time, they usually don't explode in value quickly. If you're expecting to double your money overnight, stocks probably won't do that. They are built for consistent growth, not for instant profits. There are also risks during market downturns. Just like we saw in the crash of 2008 or in 2020 during the pandemic, stock prices can fall sharply and unpredictably when fear spreads or the economy hits trouble. In 2025, another concern might be overvaluation. Some parts of the market may still be inflated after years of growth and stimulus, meaning prices are higher than the companies are actually worth. Even with these risks, stocks remain one of the most reliable ways to build long-term wealth. They are stable, diversified, and backed by real businesses that produce goods and services. Now let's look at the world of cryptocurrency. One of the main reasons people invest in crypto is the potential for massive returns. Over the past decade, some investors have seen their investments multiply many times over. Bitcoin, for example, started as a digital experiment and turned into a global phenomenon, rising from pennies to tens of thousands of dollars. Crypto is also built on a principle of decentralization. That means no government or central bank has control over it. You own your crypto directly. You're in charge of it. And that independence appeals to a lot of people, especially those who don't trust traditional financial systems. Innovation is another strong point. Blockchain technology is changing industries far beyond money. From smart contracts and decentralized finance to digital art and secure voting systems, crypto is powering a wave of new tools and platforms, and it's accessible. You don't need a financial advisor or a bank account to get started. Anyone with a smartphone and an internet connection can participate. But let's talk about the risks. Cryptocurrencies are extremely volatile. Prices can swing wildly, even within hours. What goes up fast can come down just as fast. That kind of volatility is exciting, but it also makes crypto emotionally and financially challenging to hold. There's also the problem of scams and bad projects. With few regulations, anyone can create a token, make promises, and disappear with investors' money. Stories of rug pulls, lost wallets, and hacking incidents are still common. The future of crypto is uncertain. Governments around the world are watching closely. Some are embracing it. Others are planning regulations or outright bans. While the technology is powerful, It's not guaranteed to win in every place. Crypto offers big rewards, but it also carries big risks. It's not for everyone, and understanding what you're getting into is critical before investing. Now let's compare the two directly, in real-world terms. When it comes to volatility, stocks tend to move slower. Prices rise and fall based on company performance and economic indicators, and although they can dip during crashes, the overall pace is manageable for most people. Crypto is a completely different story. It moves fast and unpredictably, which can lead to massive gains or massive losses in a short amount of time. In terms of regulation, stocks operate in a well-established system. Companies have to report earnings, and the markets are closely watched by financial authorities. That provides some sense of security. Crypto is still developing in this area. While some platforms and coins are becoming more structured, the industry as a whole is still largely unregulated. Ownership is another difference. With stocks, you're buying a piece of something real. A company that produces goods, employs people, and generates revenue. With crypto, you're buying a digital asset. In some cases, it has real-world utility. In others, it only has value because people believe in it. Returns are also a major factor. Stocks usually deliver consistent long-term growth. They're ideal for building wealth steadily over decades. Crypto can deliver explosive short-term returns, but also huge losses. It rewards those who take risks and punishes those who aren't prepared. If you're looking for passive income, many stocks pay dividends. That means you earn money just for holding them. In the crypto world, some coins offer staking rewards or incentives, but they're less common and often less reliable. Both stocks and crypto are liquid, which means you can buy and sell them fairly easily. However, stocks only trade during market hours on business days. Crypto is available 24 hours a day, 7 days a week. That gives you more flexibility, but it also means your investments are always exposed to market movements, even while you sleep. In summary, stocks are like a smooth highway, slower, safer, and built for long-distance travel. Crypto is more like an off-road trail. It's thrilling, it's unpredictable, and if you know what you're doing, it can take you to incredible places. But it can also throw you off course if you're not careful. Now comes the big question. Where should your money go in 2025? If you're just starting out, or if you prefer stability and peace of mind, stocks are probably the better place to begin. They offer a more predictable path to wealth and give you time to learn as you go. If you're more experienced, open to risk, and have money you're willing to experiment with, then crypto could be part of your strategy. But treat it as a small piece of your portfolio, not the main focus. A balanced approach might look like this: 70% in diversified stock funds or large, stable companies, 20% in growth stocks or emerging markets, and 10% in crypto, focusing on well-established coins like Bitcoin or Ethereum. The key is not to choose one and reject the other. It's about understanding how each works and building a strategy that fits your risk level, your goals, and your personality. Investing isn't about chasing the hottest trend. It's about knowing what you're doing, staying consistent, and letting time do the work. So are you leaning more towards stocks, crypto, or maybe a mix of both? What matters most is not where the money goes. It's how well you understand the path you're taking. Now that you know the differences, the strengths, and the weaknesses, you're in a better position to make smart choices and build the financial future you actually want. If you enjoyed this breakdown, subscribe to Financial Depths and join our growing community of people who are learning to navigate the financial world with clarity and confidence. Thank you for watching, and I'll see you in the next video.